Hi, it's August 1st. This is the BAM Weekly Muni Market Update. Mike Stanton here with Chris Flossie from BAM's Capital Markets Desk. Chris, thanks for taking some time this morning.
No problem. Thanks, Mike.
A really busy week, pretty much on every front this week. A lot of economic data. We had the FOMC meet and choose not to make any changes to interest rates. We also saw a very heavy calendar of muni bond new issues. Maybe we can start just really quickly talking about some of the economic data. It was as I said, a long slate of data. Started with consumer confidence, which came in somewhat stronger than expected for the week. We then saw a somewhat stronger than expected second quarter GDP preliminary reading. And then the economic data calendar culminated just this morning on Friday with the July payrolls data. That came in weaker than expected and was also accompanied by a fairly significant downward revision to job growth for the last 2 months. So a lot for the bond markets to digest. As of Friday morning, what are you seeing?
So leading up to the week, it was pretty choppy. We saw some rallies and some sell-offs along the week to coincide with those economic numbers you just discussed. I mean, early this morning, Friday, based on the biggest story is those revisions in the prior months. So we saw equity markets down sharply. We saw fixed income yields come in sharply. So the economy definitely seems to be taking a pause in that from that perspective.
And for the muni market, there had been a bit of a rally on MMD and the benchmark indexes coming into Friday morning. Then treasuries took off after that news. I'm sure munis are not quite matching them yet, right?
Right. So, I mean, and circling back to the Fed data. So you mentioned that the Fed was stable this meeting. And right now, the market is expecting a 60% chance, a more than 60% chance of a cut in September. And then they're still anticipating one cut so far in 2025. So there's really nothing more expected from that perspective. The muni market, we're seeing a lot of strong technicals still. We saw another week of mutual fund inflows. There was a week of outflows a couple of weeks ago, but 2 consecutive weeks of inflows. We have another strong month of reinvestment coupon income coming today, August 1st. So we anticipate the investors to be able to be very active in the new issue market with all the supply that's supposed to come.
And our colleague, Morgan Fahey, moderated a panel for the bond buyer yesterday, part of their virtual buy-side summit. She had 3 big portfolio managers from Invesco, BlackRock, and Goldman Sachs Asset Management, all of them taking a very positive tone in terms of the market's ability to absorb supply here, both because of those coupon payments as well as the continued demand. Sean Carney from BlackRock in particular mentioned you're starting to see crossover demand from taxable accounts who have seen the ratios of muni bond yields to corporate yields edging upwards and are starting to see value in the market as well. So again, looking back at the calendar, the other thing that was interesting, a couple of quotes in the bond buyer this week that maybe the calendar will be easing off in the second half of the year, so in the coming months. Certainly not seeing that yet. Very high calendar this week, which is unusual for a Fed week. And then next week, $17.5 billion. That's almost historic, right?
Right, 17.5 billion. I'm reading in a couple of notes this morning that it could be the 4th highest on record. So luckily, we have all that coupon income coming in and the inflows coming in mutual funds. So I think that investors are going to welcome that supply with open arms.
So looking at the BAM insured calendar, what stood out this past week?
So this past week, we remain active in the primary market. There were 17 transactions across 11 states, 340 million of par insured. It was very heavy on the negotiated side this week. Competitives took a little bit of a pause in terms of the par insured. There was an Augusta St. School District 402 in Kansas that Piper Sandler priced this week. That was $55 million. Then there were 2 Stifel deals that priced the Madison Plains Local School District in Ohio, which was also $55 million, and the Northeastern Illinois University deal, which was just inside $53 million.
And looking at next week, there's some transactions. I know there's deal teams watching the market. They may or may not come in this coming week, given how much those big issues are going to be taking investor attention. But what is standing out to you? What do you expect to price?
Right. So right now there's a Godly Texas transaction that's $58 million with Raymond James. And like you mentioned, a lot of deals will probably be awarded early next week. So we anticipate to be very active with that calendar being so large.
Great. Well, thanks for your time today, Chris. We covered a lot of ground. Have a great weekend.
Thanks, Mike. You too.